This is Chip Maxwell, and you're listening to the Retire Smart podcast with David Brooks. Rising mortgage rejection rates, foreclosure spikes, and growing consumer debt. Are we heading for another financial crisis? Today, we unpack the latest data on mortgage rejections, credit struggles, and what it all means for homeowners and the economy. Here is David's take on the warning signs and what to watch for next. David, I thought we were done 2 weeks ago. One more blast from nature. Did you make it through this last storm okay?
Yeah, it was fun driving through the slush and snow and then going home to shovel one more time in mid-March here. I guess the groundhog is having fun with us, right?
Yeah. Well, nice weather coming up over the weekend. Hopefully this will all be in the rearview mirror. I'll tell you what's just getting fired up now is March Madness. We've got two local teams, of course, Creighton and UNO. I guess they're branded Omaha University for the tournament. Do you have a favorite?
Well, obviously UNO's a 15 seed, and as we're recording this, the games haven't started. So by the time this hits the airwaves, the
I think
first
they
round
drew St. John's. That's a tough draw in the first round. The Big East
15
champion.
and 2s, matchups. I think there's 11 of them that have won in the history of the tournament versus 145 that have lost. So probably not really good odds, but great for them to see them get there. Well, what was fun is, and again, I don't have a dog in this race, so I think Duke looks pretty strong this year overall. Yeah. But I will tell you is I saw a video of John Gruden, the former Buccaneers.
Okay.
Super Bowl coach of the Tampa Bay Buccaneers and the Raiders and et cetera. But I guess he kind of said something on Twitter about University of Omaha, Nebraska.
I didn't know that.
Well, they sent him a whole package of logoed gear, sweats, sneakers, and a trash can. They actually sent him the trash can, which they beat.
The trash the trash can, part of their ritual.
He got a lot of play on Twitter, having fun. So I think it's great that these kids are at least going to have a great experience. And kudos to UNO for making the dance. That's a big deal when our beloved University of Nebraska, Lincoln, of course, is a high seed in the third tier tournament, the Crown tournament or whatever.
Yeah. Creighton got a tough draw in Louisville. A lot of experts say Louisville should have been seated higher, and that's a real tough draw for Creighton. We'll see what happens there. All right, into the news we go. David, you sent the team a chilling chart about mortgage refinance rejections, am I looking at this right? Almost half of all refis are being rejected these days. I hear echoes of 2008 when something like that comes up.
Yeah, this is the highest in well over a decade. This chart goes back 12 years, and we're like 42% of all mortgage applications denied. So this is now there's a couple reasons, either lack of credit, lack of income to cover said debt you're trying to refinance or take on, or the asset didn't appraise, right? So there's, that you're trying to finance. So there's three different ways you can get turned down. Either the asset you're using as collateral does not appraise at the value you're asking for, your income to debt ratio does not qualify, or your credit score says, no, you're not worthy. And all those are going in the wrong directions. Asset levels are going down. We're seeing real estate soften, so the prices are going down. Income growth is going down, wage deflation is starting, and more people are getting delinquent, which means worse credit scores are on the horizon, right? And we've talked about that in credit card debt, auto loans, et cetera, and now mortgages are getting behind. In fact, I've got another chart I sent early this morning that talks about just how far behind people are getting. Foreclosures are at a 6-year high. And that is scary. So, and pre-foreclosure activity, Liz pendants, as they call them, they file in the courthouse, hey, we're going to start taking action. And that is expected to escalate. And it's just now been uncovered via Doge that we've had about 6 million homeowners, Chip, that have gotten mortgage in the last 3 years and haven't made a payment. And they were being covered by the government.
Like 2008.
Yeah. And so these people are going to walk away from their homes if they actually have to start making payments. They were given deferments, or the government was in fact covering them, which should make you as John Q. taxpayer pretty upset. It does make me pretty upset.
Keep thinking of the movie The Big Short, but now maybe here, okay, here's a glass half full attempt. Maybe it's good that bad refinancing propositions are being rejected, or that the foreclosures are happening, at least Is this an ounce of prevention is worth a pound of cure?
Yes.
Or are we still getting into dangerous territory?
Well, we're going to go through some pain, right? But the faster we go through the pain, the easier the wound heals, right? And the longer we keep trying to stretch it out and not treat the problem.
Which is what happened in 2008.
Correct.
Nobody wanted to face the truth of what was happening.
And I think that's what's different about this administration. While we know the playbook of Congress has been for the last, 5 or 6 crises we've had going back the last 15 years, print money, send it to the American public in one way or the other, right? Bail people out. No mas. We have $36.5 trillion of debt, and we need to get it under control, or the country will eventually go bankrupt. And then you want to talk about real problems, look at Venezuela, look at other countries that have gone fiscally irresponsible route. And once you get to that point of no return, it's pretty scary. So you have a pretty smart fellow in Scott Bessert running the Treasury now, and they are adamant that they're trying to get these things under control. You cut spending, you raise revenues, right, and you lower costs. And that's what they're trying to do.
David, there's an index put out by the University of Michigan that we've checked in on numerous times in the past, and you shared some of the latest information. It's about consumer expectations. And I still, to me, it's counterintuitive. It's a disconnect or something. Well, Donald Trump's back in the presidency. We're going to come roaring back economically. But consumer expectation is down, like record down. What's happening?
Well, people are realizing just how many people were living off the government, right? The government is supposed to live off the people, not the other way around. Yet we have local politicians here, several in our local state legislature, that keep crying and whining about, oh, they're cutting this, they're gutting you for that. No, they're stopping spending for money we don't have. Very simple math, right? Where are you going to pay for said benefit? That's what I ask every politician. Just show me where you're going to pay for it. Oh, we're going to tax the rich. And again, we just shared it on the show 2 weeks ago. The top 1% are paying 46% of every tax dollar collected by the federal government. 46%, the top 1%, Chip. That's up from 41% when Trump's tax cuts got enacted back in 2017. The top 10% are 76% of every tax dollar that's collected. And that is up about 6% over that same time period. So this is nonsense that you can just, but it's populist. We're going to tax the rich. No, we have to get our fiscal house in order. We need to have just a blunt conversation. We should do a whole YouTube video on that. What is the purpose of the federal government? What functions should they actually do? And the rest should go back to the states. End of story.
Mushing through the slush. On my way into work this morning, I heard a quick soundbite from Elon Musk, because there's another court going after him saying you can't do what you're doing. And so the interviewer says, well, what do you have to say to that? And he said, basically, I'm paraphrasing, he said, this ship of America is going to go down unless we jettison all this extra baggage, fraud, waste, spending. That's why I'm here. That's why I'm doing what I'm doing. So it's quite a tug of war that's happening right now.
It is. And again, you're going to hear all kinds of white noise and nonsense about this. But the consumer sentiment is telling you, because people recognize this, right? We had the majority of Americans voted for this by far. And it's still, as far as the last poll I saw, 74% approval of what's going on with Doge and the government cutting expenses. It's just common sense is coming back to reality, which is great to see. But this also means people realize that, hey, the free lunch is over. Job cuts are coming across multiple industries. We've talked about it for a while. So people looking out realize they're going to have to cut their spending, which tells me we have a recession most likely coming.
Well, speaking of coming back to reality, and there is no free lunch, we've only got about a minute, David, but I want you to explain this chart that shows the rubber is starting to meet the road when it comes to paying off the debt. 30 trillion, 35 trillion, 40 trillion. Just keep running up more. No, eventually you have to start paying the bills. And you shared with the team some data showing the pain that's coming in actually paying off our debt.
Right. So we're deficit spending at about $2.3 trillion this year. We have $7.4 trillion that is maturing in debt now. That has to be what we call roll. This debt is maturing, so we have to issue new debt to pay those bondholders off at maturity. So we have to issue so that's about 9.6 to 9.8 trillion, give or take a few dollars based on what interest rates are, that has to get financed in this calendar year. But because of when the maturity is, Chip, almost 5 trillion of that is in the next 90 days. It's happening right now. March, April, and May are the biggest months. And this was all the fault of former Treasury Secretary Janet Yellen. And I talked about it extensively the last couple of years. She was financing everything on short-term notes or T-bills, 2 years or less, knowing that she was going to get through the election. They were hoping that the other side won. She was clearly for the other side in the last election. But now all this debt is due, and Trump now has to deal with this, right or wrong, and he realized that. And again, Scott Bessert's the smartest guy to ever hold the position, in my opinion, of Treasury Secretary. Janet Yellen's probably the lowest IQ to ever hold that position from the people I've analyzed. And so very opposite. He realizes we got to finance this, which is why he's trying to get yields down. And again, they're down. The 10-year Treasury note is down about 50 basis points or so since the election, but they need it down another 50 basis points immediately. And, they can't force that to happen. But if job losses continue to escalate, the Fed will have some leeway to lower rates on the short end of the curve, but the bond market is going to price the long end of the curve. You just need to understand, if we have to roll this debt chip at north of 4%, which is what it says we'll have to do today, where rates are, that's an additional $800 billion in interest per year from where we are right now. So that deficit spending will be $3 trillion, right? So we need Doge to gut faster, harder, and yes, break a few eggs making the cake.
Thank you for listening to the Retire Smart podcast with David Brooks. If you want to learn how to generate lifetime income, reduce your tax bill, and maintain your lifestyle in retirement, visit retiresmartpodcast.com. And make sure to subscribe to keep up with new episodes every week.